welcome to accounting. Lesson 1-1 is all about the accounting equation. If there is one thing that you have to take away from accounting, it is this, the accounting equation. But before we can jump into what the heck the accounting equation is, we have some vocab words that we need to define. So we're in accounting class. Let's first take a look at what the heck is accounting. So accounting is the planning, recording, analyzing, and interpreting of financial information for a person or for a business. And the way I like to kind of remember which is which here is that accounting ends in ing, and it includes all these other ing things: planning, recording, analyzing, interpreting. So that is accounting. Now, in order to plan, record, analyze, and interpret financial information, we have to have what's called an accounting system. So the system is the process that allows us to do all those things mentioned above, and then to take that financial information and give that to management. Accounting records are the summaries of the business's financial activities. And when we have financial statements, those are the actual reports that summarize the overall financial condition and business operations. And we're going to have two financial statements that we learn how to create in this class. We're going to have a balance sheet and an income statement. So all of these have a lot of similar words, but again, I like to use that ing to remember what the heck accounting is. And then if you think of, we have a system in place, that's the process in order to go over that information. The information is stored or summarized in the actual record, and then the statements are what you would give to a business or a company owner, and that says, hey, here's where we are financially right now. We're doing really good, or we're not doing so hot. So those are our big four vocabulary words. Throughout this course, we are going to practice the whole accounting system and create those accounting records and those financial statements under the guise of the fact that we own a service business. So when we say service business, that's a business that provides a non-tangible product for a fee. Now, non-tangible product is something you can't hold. So some really good examples of a non-tangible product would be like a haircut. I can't hold the haircut. I'm paying money to get the haircut, and that's a service. Or an oil change, a visit to the doctor, a pedicure, or a manicure. Those are all services. So when we practice doing all these accounting things, we're going to do it under the guise of the fact that we would own a service business. The other thing that we're going to practice doing is the fake businesses we use to learn accounting are all going to be proprietorships, or what are called sole proprietorships. And those are businesses owned by one sole person. A lot of it is the same if a business is owned by multiple people, but it can get a little confusing. So in our examples, you're only going to see that the business is owned by one person. Now, the last important vocabulary word when we talk about accounting is that our service business is what's considered a business entity. And in accounting, we have to live by this rule. And the business entity rule or concept is that we need to keep records of our business's financial information separate from our individual records. We're not going to mix business with pleasure. So if I own my own company, I can't take all of my personal bank account stuff and mix that up with my company's bank account stuff. They have to be kept completely separate. So the business is its own separate entity, and me as a person am my own separate entity. All right, now that we've got the vocabulary out of the way, we get to the fun stuff. Here we go, the accounting equation. First thing I want you to recognize is that the accounting equation is in the shape of a T. We're really going to love the letter T in accounting. And we've got a left side amount, and then we've got a right side amount. And the accounting equation always has to be equal or in balance. So on the left side, we've got assets, and our assets need to equal the liabilities plus the owner's equity. And if you're like, you said a lot of words, it sounded like no idea. We're going to break down what the heck an asset is. We're going to break down what a liability is and what owner's equity is. But what you will need to remember is assets equals liabilities plus owner's equity. Some students told me that the way they really like to remember this is by ALO, like aloe vera. A for assets, L for liabilities, OE for owner's equity. It spells ALO. But it is important that the equal sign and the plus sign are in the right spot, and liabilities comes before owner's equity. I also look at this and it's like, okay, it's in alphabetical order, ALO. So let's break down what assets, liabilities, and owner's equity are. So an asset is anything that the company owns that is worth money. Now, in accounting, we're going to have 4 different types of assets. The first asset that our company may own is cash. The second is accounts receivable from a specific company. So if I own a business, I might be receiving money from somebody else. So it would be like accounts receivable Target. The third asset is supplies. These are items my company owns, so maybe paper clips or pencils. Those are kind of dumb supply examples, but there you go. And the last type of asset is prepaid insurance. So my company may own insurance. These are all things that are worth money to my company, and they go on the left side of the accounting equation. Now, it's super important that we keep those asset accounts in order. And the way I like to remember this is, if you can remember that cash money is king, then you can almost remember the first letters of all the accounts. So if cash is spelled C-A-S-H, I like to remember the asset accounts are spelled C-A-S-P. So I know the P isn't quite an H, but that's how I remember it. So if I can remember cash, then I can remember the next account starts with an A, like the next letter in the word cash, and then S, and then P. So when we talk about assets, they do need to be in this specific order. So when I take all of my assets and I add them up, those need to equal my liabilities plus my owner's equity. So liabilities are the opposite of assets. They're anything that my company owes or any debt that I have in my company. And the only, literally only liability that we are going to have is what's called accounts payable. So it's when I have to pay another company. So if I owe Target money, it would be accounts payable Target. And then the last part of our accounting equation is owner's equity. So the owner's equity is the owner's right to all of the assets, or it's basically the net worth of the company. So if the asset is all the stuff that's worth money in my company, and the liability is all of what I owe, when I take my assets, what I have earned in money, and I subtract what I owe, that's what's left over for me as an owner. That's my right to take home. It's what my company's worth. And so the type of owner's equity and the account title that we have for owner's equity is the owner's name, comma, capital. And capital just stands honestly for money. So that's where we get this. So owner's equity is the owner's name, comma, capital, because it's the name and it's how much money I as the owner would have. And that, my friends, is the accounting equation.